Hello everyone, wishing you all a very happy Pongal. In this video, we are going to explore what happened to Nifty and Bank Nifty on Friday. Nifty opened with a red candle and then it started falling down till this point of 17,761, and then it gave a good recovery from there, and towards the end there was some sort of small retracement and closed at 17,950. Bank Nifty again had a large red candle and then it made its low, and then we saw that there was a good recovery towards the end of the day and gave a positive close. Currently closed at 42,339. So this video I am going to spend a little bit more time to explain what can unfold in the coming days. We are at a very crucial juncture. As you can see, both the indexes are stuck between some sort of levels. You see this orange band on both the extremes, right? So it's stuck into this range for some time. Similarly, the green one here and the orange one here, the bank nifty is also stuck for a long time. Now, it's important to understand what will happen once this band is cleared. Say on the upside, if it is going higher or if it is going down, what can we expect? It's a very important view one should have, because uh, there could be a big breakout happening in the days to come. And if you are option buyer, probably this is a great opportunity for you to maximize your profits. At the same time, great opportunity to lose your capital. So one should have a great understanding of what these levels mean and how they are going to interplay with our intraday setups. So I might be giving you some sort of intraday levels, using FASP levels and all these things. But then once the level is taken out, you should also have a broader picture of what's going to come. For that reasons, I'm going to spend some time explaining the Nifty first. Nifty, let's look at historically. Okay, we will discuss the FASP levels, everything little later, because I saw that a lot of people have been, saying that the market is really tough and then they are losing money and so on. So I wanted to break it down. Okay, I wanted to break it down and show you that Nifty made its peak at 18,887, and then from there on there was some sort of fall, and this one was supposed to be a temporary support zone, because there were a lot of play happening in this region in the past. But once it broke, it took a second level of support here. This one is a much more consistent one. Then it had a retracement, and again it fell down, again it went up, again it fell down. So making a triple bottom sort of structure, right? From here the market has given a close at 17,950. Now for the intraday, I can go on to say that these are the FASP levels, and T7 at 18,303 and 17,592. So these are the levels that I am giving you. But sometimes things could happen. Once the breakout of these levels happen, you can expect the trend to continue, because this is a channel that's there for very long time. How long it is? You see this channel, it was from October. This The Nifty is stuck in this region from October till 13th of January. It is stuck in this level. So it's a very high consolidation zone, and that breakout could be very fierce, and you can expect some sort of terrific moves once these levels are cleared. So although these are intraday levels, and then I give you some views, say that you, as a option writer, you can go ahead and then write for Monday T6 levels and T4 levels, T6 and T4 for writers. And if there is any sort of small gap up or gap down, say T2 levels and T1 levels, here you can comfortably initiate a buy position at T2, and then keep trailing the stop loss as it goes high, and then keep one level down as stop loss, right? That is the intraday setup. But sometimes things can go wrong, right? And then if there is some sort of drastic gap down opening at T5 and so on, then you should wait, because it has broken a short term support zone, and it is going down, right? You don't know really whether market would recover, or it is only a spike. You have no idea. So you cannot go on to take aggressive positions. Sometimes it might open at T5, then giving you a false hope that yeah, it's clearly broken. And the next candle, you can see a terrific bounce back and probably it might be trading at T2. So such situations where there is a great volatility in the opening itself, wait, wait and observe what is happening, because these are long-term zones that's getting broken. So you need to wait and see how the market is going to react. Probably you can give up the first 1 hour of trade and see. Suppose it is making newer low T6 and then newer low T7 and then going below that, then it is a trend confirmation, which means the downtrend has started, and then you can expect it to fall very deeply till you can expect 17,300. And if this is a good level of support, and it also comes from the past. And what is this? This is where you will see a lot of gap downs, and then there is a gap up, and then there is a gap down, and then there is fierce action happening. So these gaps will be filled. So if these gaps are to be filled, maybe they will go and then breach it, and then you can expect further fall. And what is the next level of support? It is at 16,800. Now you must be knowing why I made this video little longer and probing into various scenarios. So it's not about just the FASP levels and then you should blindly follow this. You should also have a long-term view of what is going to come. This is stuck in a big wide range of channel. It is breaking it down, and then as it is confirming it's going to be downtrend, till where you can expect, you should have some fair idea, right? First level of support at 430 to 320 levels, and if that gets broken, then you have something at 815, 16,815 to 16,753. If that gets broken, you have something at 16,474 to 16,350, so on. So there are many levels are there which I have drawn, and people who are interested can just post in the comment. I will give you these levels. Probably you can map this in your charts as well. There are many levels that you should know till where market can fall, and I have drawn till 12,000 and even below that. So for every 500 points to 1,000 points, I have drawn all these levels. One should be aware of things like if it is going to downtrend, till where it can fall. If it is going to be uptrend, where will I find the resistance, so that you can exit your profitable trade reasonably. Or if you're going to make some loss, you can cut it short using this additional information. Now that we have discussed all that, so for Monday, what you can do is write down, if you're a writer, write down T5 and T4 if you want to be a little aggressive. For a safer play, go higher levels, T6 and T5, or T7 and T7. That's your choice. But for aggressive people who want to do some nice strangle, T5 to T4. If you have some good capital, you can initiate that. So that's the range for writers. And for buyers, of course, you should get it at the levels. Probably if you see some T2 opening or T1 opening, wait for it. As it reaches T3, you can take a reverse position, or as it enters into this zone, this will act as resistance. The top one will act as resistance, the bottom will act as support. So you can initiate the positions with one level down as stop loss and one level as up. As it moves, you can start trailing. So that's the setup for Nifty. Now let's explore Bank Nifty. Bank Nifty is also experiencing a similar thing. It had a great fall. This is one mini support zone which was broken, and then now it is acting as resistance. You can see that market opened and then it made a fierce down movement. Then as it reached here, from here on there was a lot of consolidation for about a couple of hours, and then it gave a massive rally towards the upside, breaching these levels. So at this point, it looks like Bank Nifty is going on an uptrend, and Nifty is not giving you any certainty of where it is going to go. Like, is it going to be a downtrend in coming weeks, or is it going to be uptrend? It's not very clear. But Bank Nifty is showing some sort of upside moves. There are also a lot of patterns that's supporting it to show that it is going to be an upside move. But we will have to wait and watch. What we can do is, as a writer, you can go ahead and then write T7 positions, and then add the premium. And if once it reaches T5 on either side, you can square off. if it is reaching T5, you can use T5 as stop loss, because you are writing this T7 positions. You would have collected the premium, and if it is staying within, you will be collecting the premiums on both the sides. If it goes to T2 and T2, still you will be earning. But the moment it reaches T4 or T5, probably your profits will start to reduce, or you might even enter into slightly negative uh, portfolio. So that is a good time to exit, right? That's how you manage your losses as a writer. I'm only talking about intraday writing, right? These are not some positional writings. These are only for Monday morning you initiate and the evening you close it. And for buyers, wait for the right opportunity. If you are getting some sort of opening at T2, then it's great. You can initiate a PE position at T2 itself. You will find a lot of resistance, but T3 is the strongest resistance. Okay, that is 42,630 levels. Once that's broken, probably we will have to wait and see. Supposedly there is a gap up opening above T3. Just give away the 1 hour of trade, because that was a long some sort of resistance built for last couple of weeks, and it struggled to cross that and sustain above. And if it is crossing, then it's going to be an uptrend, because it got a supported lower level. It also got a supported mini support zone, and now it is crossing that T3 level, which acted as a strong resistance in the recent times. It broke that as well. That is a great confirmation for further upward sentiments. So you will have to wait and watch. So don't be just mindlessly initiating positions. See what is, have these information, process it with the long term information of where the resistance is, what sort of positions are being initiated, what is the big players doing, and see this 42,600 is a very very critical zone. Probably I will go here, you will see that 600 you got rejected, 600 it got rejected, 600 it got rejected. Then you see that 600 is where it gave a gap down. So much of data is there at 600 levels that acts as a resistance on the upside. So once that is cleared, then you can expect some sort of bullish momentum, but wait for the confirmation, because in 15 minutes candle that we see some 200 points moves and 300 points moves, and then on last Thursday there was a 500 points move. This one was the 500-point move. This is all like crazy things that's happening, and markets are changing now. In December, probably you would have seen that market was stuck in a 200 points range to 300 points range. In October, you saw that it is stuck in a narrow range of 200 points, 300 points as well. But now, if you see that the average movement is there somewhere around 600 points to 700 points, that means to show that the momentum and the volatility is going to kick in, and in coming days it's going to be even more challenging. So you will have to first adjust to the new environment where the market has already giving you some clue. Adjust yourself fast, otherwise you are going to be the loser. This is training your mind to see that higher volatility, and suddenly there will be even higher volatility with 1,000 points moves coming up, with budgets lined up, and then all the festival seasons are over, and then historical trend data also suggests that this is the time that markets shows extreme volatility. So you should be prepared to handle those sort of situations. So club your ideas, but be flexible. When the breakout happens, be very flexible. And the moment it breaks T7 and then this level of 41,500, trust me, it's going to be a very very big fall. You can expect somewhere around 1,500 rupees fall. The last rung of support in this is 40,000 and then 39,600. If that is only a small support, and that's why the color is different. And if it breaks, the next level of support is at 37,500 to 37,700. You can see that's a massive massive gap. So if fall happens like say 2,000 points and all, you will be losing big. And if you're a writer with gap down, that's going to be really hurting us big time. So be very sensitive, close your positions on an intraday basis. All these things that we are giving here are for intraday only. So do not initiate and then carry it overnight, because these fast levels themselves change. What is T1 today will be T5 tomorrow. Who knows, right? So These levels are for the intraday setup. Initiate it wisely, and the moment you see any sort of great volatility happening, exit. As a writer, if the moment it touches T5 on either side, you should think about squaring of your positions. And if you're a buyer, wait. And if it is a flat opening and then slowly gradually going up, then you can initiate contra positions, and preferably at T3 levels you can initiate PE. And CE positions you can comfortably initiate at T2 or T3. T3 would be much more safer. And keep the lower levels as stop loss, and higher levels for trailing the stop loss. So that's the view for both Nifty and Bank Nifty. I hope you find it useful. Wish you all the very best, and looking forward to meet you all in another video. Thanks.